Hello and welcome to the Rose Snyder Jacobs webinar series. My name is Jessica Leitao. I am a tax manager here at RSJ. Today I have joining me someone who needs no introduction, but we'll give him one anyway. Tony Rose, founding and managing partner of Rose Snyder and Jacobs. Hi, Tony.
Hey, good morning,
Good
Jessica.
morning. How are you?
Fine. We seem to be sitting in the same window.
Same window, different views.
Yes.
So today we're actually going to be talking about the Corporate Transparency Act and the beneficial ownership information and the report that goes along with it. Are you ready for that?
Sure,
Sure.
with some caveats.
Okay, what are the caveats?
Okay. Um, uh, as accountants, we're really here to help our clients, and we try to understand laws when sometimes attorneys would be even more appropriate than accountants for doing that.
Right.
I think we do a really great job on taxes, but then when it starts roaming into other areas, we may not be that on the beam. So it's very important for everyone listening to this to understand that if they're going to apply it to their company, that they need to talk to their corporate counsel
Mhm.
and any advisor their corporate counsel might recommend to help them navigate this law. On its face, and the government would like you to think it's very simple. This law is not necessarily very simple. So hopefully in the next, I don't know, 30, 40 minutes, however long this is going to be,
Mhm.
we'll be able to explain the stuff as we as lay people understand it. Maybe talk about some advice we might give again as a lay observer.
Mhm.
Uh, of what's going on with this law. And then you're going to have to go back to the people that you think are really smart in the legal profession and confirm what we believe to be true so that you guys do not get into any trouble in the interpretation of this law. How's
Thank you.
that?
I
What
think that was a great
big
one.
skull, a big
It was
skull and crossbones.
good. I'm glad. As we talk about this, you will notice that you have a Q&A option available. Anyone that's on this call, please feel free to ask any questions. We will do our best to answer them during our conversation. If at the end of it we still haven't answered, we will go ahead and do that. But we want this as interactive as possible, and we know that this is new legislation, and we're aware that there's a lot of different interpretations. So please ask questions, and we're going to go ahead and get started, Tony. I'm going to start quizzing you.
Okay, great. Let's get
All
going.
right. Sure. So the base question, what is the beneficial ownership report?
All right. Well, there was something called the Corporate Transparency Act that was enacted in order to ferret out evildoers in our financial community.
Okay.
And to that end, it created a requirement that began on January 1st, 2024, for businesses to commence reporting to the Financial Crimes Enforcement Network their 25% or more beneficial owners and control persons,
Okay.
two different classifications, um, as well as the people that assist in these companies applying for their corporate and or other entity documents. Now, it requires companies that are created in 2024 to report within 90 days. It's important for everyone to understand that in 2025, it'll be 30 days from creation. If you register with the state or any other kind of governmental entity, you need to report. And then any company in existence prior to January 1st, 2024
Mhm.
is required to report by basically January 1st, 2025. And what are they supposed to report? Who their beneficial owners are and control people in their organizations. Clear as mud already?
Yeah, basically. So I'm going to break down a couple of those points so that we can kind of get a little bit more clarity. So we talked about, you briefly went over who we're filing with, and I kind of want to talk about that a little bit more. So you said we're filing with the FinCEN, is that correct?
That's correct. The
Okay.
Financial crimes enforcement network. Now, it's very important for everyone to understand that theoretically, what you report is kept incredibly confidential. The law specifies who can access that information. So that access is not going to go on the net. It's not going to be generally distributed to everybody. And what they're looking for are patterns of people that may be breaking the law or breaking the financial rules. And so this is for criminal enforcement purposes.
Okay, so I guess we're feeling the heat now coming down, trying to really snap into those areas where there's been a little bit of murkiness before. And I know we talked that this takes effect as of January 1st of this year. I know you went over those deadlines, but I want to just reiterate if it is a company that is starting in 2024, they have 90 days. And I think we kind of talked about this previously when we were going over the information, but this isn't 90 days from the EIN, correct? When does the 90 days start that you have, like your filing deadline start?
It's 90 days from the acknowledged application by the state or other governmental entity that helped establish your company or your
Okay.
entity. Now, who's not included? General partnerships do not necessarily have to register with the state, and they're not necessarily required to report. Trusts do not necessarily generally register with a state or Indian tribe or a possession of the United States. They don't have to report. It's going to be someone, if you're located in a state and you go to the state to get recognized and you have a state number, those are entities in general that may have to report.
Okay. And while we're talking about the state, do we have a clear definition of what the state is or what a state is defined by for this purpose?
Yeah, there is a definition. Why are you asking me a question that I can't exactly define?
I told you I was quizzing you.
Yeah, thank you very much. There is a definition. There's Let's go back for a minute and talk about resources.
Sure. Okay.
The government has published a lot of resources. One of which is a beneficial ownership information small entity compliance guide,
Hmm.
and and that guide has a lot of wonderful information, including what constitutes registering. So,
Hmm.
so there is a. I don't know. Do we have that slide? Um,
Not for the state
Here
side,
we
no.
go. That's a great slide. That's in the small entity business
Hmm.
guide, and so it starts. It's a little flow chart. Under what law was the company created or formed? And then it's a decision tree. Is the company a corporation? Yes or no? Is it a limited liability company? Yes or no? Was the company created by filing a document with the Secretary of State or a similar office under state law or an Indian tribe? So these are for domestic companies. With regard to foreign companies, basically, did the foreign company register with a state or tribal jurisdiction or a Secretary of State for a state or a tribe? If it if it did, it may be a foreign reporting entity, and if it didn't, it does not have to report.
So just so we're clear for the definition of state, so it's any Commonwealth, territory, or possession of the U.S. So that includes District of Columbia, Puerto Rico, American Samoa, all of those are actually included in this. So it's if you're even registered just solely there, it doesn't necessarily have to be one of the 50
Sure,
US states. So
sure,
that's also encompassed in this definition.
absolutely.
Okay, great. So I know that we kind of talked about this, and I know that we're looking at the slide right now for reporting companies. Do we want to talk a little bit about like just a domestic entity requirement or a foreign entity? What does that actually mean, and how does that work for their filing
Uh,
requirements?
again, there's slightly different criteria um, for a foreign entity versus a U.S. entity. Um, a foreign entity has to have a physical presence in the United States.
Hmm.
And I think that's required. Um, a U.S. entity, by its very definition, is going to have a presence in the United States, and so there's slightly different definitions. I just think as a rule of thumb, and anyone listening to this that wants to just shortcut this and bottom line this, um, I see no reason, if you have a doubt as to whether you're required to register, why you wouldn't register and report. There are some, there is a little bit of administrative burden in doing that, and an administrative burden continuing for you, if there's change of addresses and things like that that has to be reported. But if you have a doubt, and I think we'll get to the penalties later, uh,
Yes, we will.
if you have a doubt, I can't see, and you should inquire of those around you why you would worry about it. Because I think if someone is investigating you, they're going to find out this information anyway that you have to report. So when in doubt, report. Uh, that would be my rule of thumb. Those of you that are on this webcast and you want to go have a cup of coffee or go watch TV, you can get off now because
Okay, let's not do
because the
that. Let's
byword is
not do that.
when in doubt, report. When in doubt, report.
Let's back this up a little bit. So I know I agree with you, Tony. I think that there is just a requirement. And I think if you are confused in any way and you're not sure where you land, definitely go ahead and file. However, there is a list of 23 exemptions that we have on slide 2 that we should probably talk about a little bit, because that kind of gives you a really great breakdown of people that are just not required. So you
Yes,
definitely can jump off if any of these
yes,
apply to you.
and there's a list. There's a specified list of 23 different types of entities that are not required to report.
Hmm.
Basically, any entity that already registers in some way with a governmental agency, and discloses ownership, uh, is on this list. So you look at these lists 1 to 23. Most of them, people that are listening to this are not going to have anything to do with. Uh, a reporting issue, a
Maybe.
securities reporter issuer, governmental authority, a bank, depository, money service business. You can see this list. We were certainly interested in 15 accounting firm, but
I wonder why.
that is not all accounting firms.
Correct.
So if there are any accountants that are listening to this, and think, oh, I don't have to report, if you are registered with the PCAOB, you are not required to report. That's the Public Companies Accounting Oversight Board. Uh, those are accounting firms that provide services to public companies. They are not required to report. We are one of those companies.
Thankfully. Yeah.
But other accounting firms that don't do public company work have to report unless they are covered in another exemption. And I think the exemptions that are most pertinent for this group is the large operating company exemption.
Yeah. So slide 3, we're going to talk about this a little bit and what that actually means.
Yes. So a large operating company exemption has to meet all these 6 criteria. And if they do, then they do not have to report. So
Okay.
certainly larger corporations, more probably than not, do not have to report, or their subsidiaries, by the way. Does it have more than 20 employees? Of those more than 20 employees are at least 20 full-time employees employed in the United States.
So we get back to that foreign area too with these questions.
Um, does the entity have an operating presence in the United States? Does the entity have gross receipts of more than $5 million in the previous year? And the entity reported this greater than 5 million amount as gross receipts or sales on the entity's consolidated tax return or unconsolidated tax return or 1065, which is the partnership return. And finally, when gross receipts are sourced outside the United States, would that bring the gross receipts inside the United States below $5 million? Um, you have to, or it would still be over $5 million.
Right.
I misspoke. You have to answer yes to all these six conditions. If you answer yes to all these six conditions, you don't have to apply.
Right. And just talking about this overall 23 list, you only have to qualify for one exemption. So if you qualify for the large operating company, you're out. If you
That's right.
qualify being tax exempt, you're out. So I just want to clarify, looking through this list, and this is all can be found in that small entity compliance guide, which I find incredibly useful. If you look through this and you have questions or you immediately see that you are no longer qualified, congratulations, you're out of the requirement. As Tony talked about earlier, if there's any murkiness about this, I definitely would seek legal counsel and also probably just file. But we will talk about the intricacies of filing because it's not as straightforward as it might seem.
Well,
But
I'd like to point everyone out in the small business guide, and you can go to the FinCEN website and you can download that guide yourself.
mhm,
The that for each of these exemptions, 1 through 23, there is a question that
right,
helps you clarify whether you qualify as to one of these 23 exempt entities.
which we can actually go into on slide 4. We talked about the inactive company e exemption. As Tony talked about, each of these exemptions has something that looks like this, and it's very easy to say if you qualify or you don't. So I know you wanted to talk a little bit about this, Tony.
Well, I think this may be self-explanatory, but we can use this as an example.
Hmm.
If you go to that small business guide and you go to exemption number 23, it has this checklist, and if you answer all of these in the affirmative, you are exempt. And I
Okay.
don't think I have to read each and every one of these six examples. Everyone's quite capable of reading it for themselves. But there are these tools in the small business guide that help you determine whether you're exempt or not.
So, talking about the same in the same area, we mentioned briefly single member LLCs earlier, and I wanted you to
Yes.
kind of go a little bit more in depth on what you think the filing requirement is there versus what we would say like a sole proprietorship, because I think we have very stark differences between the two.
Yeah, there is a stark difference because I think a proprietorship that might be getting might have a DBA
Hmm.
by registering with their local jurisdiction is not registering with a state entity or a Secretary of State, where a single member LLC does register with the Secretary of State. So if you have a single member LLC, even though it's reported on your individual tax return, you do want to report your entity, in that case, to the Financial Crimes Enforcement Network using their mechanisms. Whereas if you are just a proprietorship, more probably than not, you don't have to.
So really that triggering factor there is the registration with the state, like we talked about earlier,
That's correct.
even though we are reporting that income federally on a tax return.
That's
That
correct.
doesn't, okay. All right, interesting. So now I think we want to talk a little bit about what exactly we are reporting. So if we go to slide 7, we can kind of talk about what information is needed and what we're actually reporting to on the business report.
Okay, and again, you can read this for yourselves on the slide. But basically, what you're doing is you're reporting your company name, where you're located, the state under which you were established, or the tribe under which you were established, or foreign jurisdiction if you're required to file, and then the EIN or other identifying number of the entity. Again, again, the purpose of this is for them to be able to cross reference multiple entities at addresses and whatnot in the search of crime or evil doing.
I know this is probably the easiest part in terms of the application, but we do have another section that we talk about company applicants versus beneficial owners. So which one would you like to talk about first?
Well, let's talk about the mechanism for reporting.
Sure, let's go ahead and do that.
If you are formed prior to 2024, the law requires you to file with FinCEN the information that we just looked at, what your entity is. Um, they're for that purpose. There is no company applicant.
Right.
The for entities that were created in 2024 and beyond, they want to identify the people that help these companies register with the state or jurisdiction they're registering in. That person is a company applicant. That company applicant must report their information. Again, they are looking for patterns of people that are constantly setting up organizations to see if there's any wrongdoers there. So a company applicant is someone that assists the company in applying for their status in order to operate in the United States. I think that's the best summary. You
Okay.
might have a better summary, Jessica, but
No, I think that's a great summary, and I think that we are going to see a lot of this going forward, especially as there are companies specifically made to help people with the application fee on their new file this in their new companies. So I think the company applicant will definitely be coming into effect, especially in 2024.
now an interesting thing about the company applicant, it's not necessarily just the person that files
Right,
with the state. So that could be a paralegal in a law firm. But the person that directs that person also needs to apply as a company applicant. Now, the FinCEN will only accept 2 company applicants for each company filing, uh, but you want to be careful to make sure that the net goes around all the people that need to report.
right.
That's where you can get into trouble.
And actually, speaking on this topic, I was speaking with Karen Goldberg, another principal here at Rose Snyder and Jacob, and she attended a seminar that spoke about people who are going to be using any type of company that they're recommending their engagement letters only for the initial filings. So for people who have newer companies that will be using these company applicants, you need to be careful that your engagement letter and whoever you're contracting with for this, it's going to be terminal. So that company applicant is not going to be necessarily held liable for continuing to update the information. So
Well, this
just kind of making sure
well,
there too.
and I might add, and we're going to get into that in a minute about the requirements for keeping information up to date and the significant penalties if you don't. So it is dangerous, and that's why a lot of professionals are very scared of this. Um, that's why the professional organizations, I believe the state bars, certainly the state boards of accountancy in the state of California and Nevada, that we are particularly involved with, uh, they don't exactly know what position uh, you should have with regard to your rights and responsibilities in this reporting regime. Uh, uh, the Nevada Board of Accountancy and the Nevada Society has said that's up to individual firms to determine whether how they're going to assist their clients. But every one of these organizations, and don't be surprised if you have to apply and you're asking someone for help. Don't be surprised if there's a very specific engagement letter that outlines what these people that are assisting you will and will not do with regard to this regime. Uh, another kind of interesting thing about this, Jessica, is that I think all state societies are writing the government and writing Congress to defer some of these requirements. Uh, I was on a meeting with a client yesterday where we were discussing, and the estimate was that 36 million entities will be required to file some sort of form, which means updating 36 million forms
Right.
every time there's a change. And that so far this year, the statistic my client heard was that only 400,000 entities have applied. So in the next 12 months, there should be 3 million entities a month applying and people aren't applying right now. And the reason why they're not applying is one, because of confusion about what needs to be, who needs to apply,
Right.
and two, because they're hoping upon hope that they delay the implementation of this law and hopefully change it, because the net this law uh, puts over the public is so wide and so broad. It's I frankly think there's going to be so much reporting, even with the most sophisticated AI, it's going to be difficult to ferret out wrongdoers. So what they're trying to do has created so much complexity
Right.
that it may be impossible to actually find out the information that they want to find out. But
Well, and I think we
know
want to
that to
add
be
that as
true.
I want to add that to our third point, which will kind of lead into our next topic. It's kind of hard to find out the direct information we're looking for, especially when we're talking about beneficial owners. And I know that partner, Karen, that I spoke about earlier, she was saying again, talking about those terminal letters, that we really don't have a clear idea as to whose responsibility, other than it's not ours, that we're going to be talking about. So let's go ahead and start talking about beneficial owners, because I think that is a really big area on slide 8. It seems easy and it seems very straightforward, but as we talked about, it's not. So let's talk about what information is needed and what we're going to look at.
Great. Okay, each beneficial owner, and we'll have to get into the definition of a beneficial owner.
Right.
Let's talk first about what they have to supply.
Okay.
If you are a beneficial owner, you need to supply your name, your current address. If it's an entity, it would be the entity's business address, but if it's an individual, it has to be their residence address, it cannot be a P.O. box. And then you have to supply your unique identifying number from either a driver's license or a passport or other governmental issued identification. And you have to supply a photo of that piece of documentation, that identification card. Now, if you're having a report for multiple entities and you're supposed to send this card, I think that could be a nightmare because you're putting out to all these different companies, companies that may get hacked, not for fault of their own, but just happens. People get hacked. Now, all of a sudden, your passport or your driver's license is exposed in their database.
Right.
In order to create less complication, and in order to facilitate the reporting of beneficial owners and anyone else, by the way, who has to report, FinCEN has created a structure where you can actually get your own identification number
So the FinCEN
issued by
ID,
FinCEN. I have one right
slide
here.
9.
I'm not going to show you everything, but it's right there, FinCEN. I was the 5,366th applicant for a FinCEN number. So when you have to report, you don't have to put all that information on the form that you file with FinCEN. You just put your FinCEN ID number. And I did it. It took less than 10 minutes for me to do it. And I have to, if I change my address, my residence address, or my business address, I do have to report that to FinCEN, but that's few and far between times that I have to do anything. And all I have to do is give the client that might need my number, my FinCEN ID number. They're in the clear. I'm in the clear. They don't have any responsibility with regard to my information going forward.
So on slide 9, I think we look a little bit at the FinCEN ID number, but what I wanted to talk about, Tony, and we talked about this a lot, was the address component. So there is a specific address component to this that is different than, let's say, filing a tax return
Yes,
for those beneficial owners.
absolutely. It has to be your residence address. If you're an individual, they want your residence. They do not want your office. They do
Correct.
not want a P.O. box. They don't want a care of your attorney or care of your accountant. It's got to be your residence address.
So again, that's a little bit different than what we do when we file tax returns. We are allowed PO Box or
That's
CO
correct.
Rose Snyder and Jacobs.
Now, again, at this point, I want to remind everybody they need to talk to their attorneys.
Right.
They're going to act on any information that we've given you today. Please, please talk to your advisors that you paid to give you this kind of advice. Um, Accountants can be very, very helpful, but you need to double check with your attorneys and make sure your accountants and your non-legal advisors have as good an understanding of what's going on here as your attorneys do.
And I think speaking into this grayness, I have a question for you about those FinCEN numbers. So as we talked about the control persons, company applicants, we all can get this FinCEN identifier. If someone does update their address or name change, someone gets married, divorced, changes their name completely, however that looks, if they update their FinCEN number, would that suffice for the company information being updated? Because the FinCEN is
It's
then
my
linked.
understanding,
Okay.
yes, and this is very important. When the company applies, uh, that's a snapshot of where they are today.
Okay.
Doesn't mean that the addresses and all that stuff is current tomorrow. And the law requires within 30 days of any of these changes, any changes in addresses
Or
of,
names.
of the uh, beneficial owners, the control persons, and we haven't talked about control
We're gonna
persons,
get there.
and your office address, that has to be modified and filed with FinCEN. Now, interestingly enough, you do not have to worry about change of addresses of your applicants. So if you're reporting an applicant because you were created in 2024, you're not responsible for monitoring their whereabouts. But theoretically, you're responsible for monitoring the whereabouts of your beneficial owners and the control persons that may have to be reported under this law.
Well, I think that applicant portion kind of goes back to what you said. This is a snapshot, and they're just helping with that current momentary snapshot, not necessarily the ongoing process. Before
I
we get,
think it's, Jessica, I think it's useful to try to think about why is the government doing this? What are they looking for? What's the purpose for them getting this information? So with regard to applicants, they're looking for people that are in kind of entity mills that are
right.
helping nefarious people get create cover so they can money launder and all that kind of stuff. And so they're looking for evil people helping evil people doing evil things.
Okay, we'll leave it at that one. We're gonna switch into control persons before we go back into beneficial owners because that one can get a little bit murky. So we're gonna talk about on slide 5 what a control person is and what substantial control can kind of consist of.
Okay,
So what does that look like?
okay. So the law requires you to report not only 25% beneficial owners, which can be a little murky, but also control persons. And what they're trying to establish is who in the organizations have significant control over the operations of that company. Now, if you are an employee of a company and you are not look on the left, a senior officer, CFO, general counsel, CEO, or COO, and you're an employee, you probably do not have to report yourself as a controlled person. To me, that means that if you're a controller, you're not required to disclose yourself in the company application. Um, there's an issue having to do with what is an important decision maker. And again, the Small Business Guide is a great source for us to determine whether we are control persons or not. Um, because it's very specific. You'll see on the left these 5 classifications, but then it says any other officer, regardless of title, that performs a similar function. So there's this huge catch-all that people can be scared of
Right.
not reporting themselves. Um, so again, when in doubt, get a FinCEN ID number and report yourself because it probably does not matter. Okay, but so you're reporting anyone who has substantial control over the company and 25% or more beneficial owners.
Before we move on from this, I know that I had peppered you with questions about this. What does this mean for advisors and consultants?
A consultant may be a control person if they have the requisite amount of influence over uh, over the company. There are many companies that do not have in-house corporate counsel, for example.
Right.
So if you're an attorney that's a corporate counsel to a company, you probably need to report on that company application as a control person. Uh, if you are an accountant where your client calls you and won't make a move without discussing it, you probably are a control person. So better safe than sorry. Report yourself. Again, it's easy if you have a FinCEN ID number.
Right. So now I think we'll move into the beneficial owners. What does that actually mean? What is a beneficial owner?
So a beneficial owner is someone that has that owns 25% or more of an entity,
Okay.
and you have to report all those people. So theoretically, if there's 25% owners, you'd be reporting those. So for many companies that report, their ownership structure is very simple. So it's very easy to find out who owns 25% or more. So that's really important.
I think you highlighted a word and it was people. So I want to kind of follow that trail for a second. We do have companies that are owned perhaps by other partnerships, and they're, maybe 50% two ways, and then you continue going up. How far do you have to follow that ownership trail up?
And you know what? I'm not sure.
Okay.
I think you have to uh, because the term in the law has to do with direct and indirect control.
Okay.
So that if you are and I'll just give you an example that may be confusing, or I may be saying it confusedly. Uh, but if you have an entity that's owned by a trust,
Hmm.
and that trust's trustee also has ownership of that entity. The trust and the trustee combined, if they're over 25%, that trustee needs to report. So the trust might own 10%, and the trustee might own directly 15%. That would be 25%. That trustee needs to report.
Okay.
Also, with regard to trusts, for entities that are owned by trusts, beneficiaries that uh, that can take income and principal out of their trust might be considered beneficial owners, the beneficiaries of a trust. So not only would the trustee have to report, but the beneficiary of that trust might report. This is why you need to talk to your attorneys about understanding who might be a beneficial owner,
Well, and
because it
it
can be very obscure.
Well, and it goes into that earlier discussion, just because you might be tax exempt for your entity doesn't mean that you'll be exempt from beneficial reporting or control person. So what we talked about as a
That's
control
correct.
person, right? So just because you may not qualify doesn't mean things that you're involved with may not require you to be listed on this ownership report, which is
And there could be you could have a business that's a operating for-profit business where a not-for-profit that would be exempt for reporting themselves as a not-for-profit entity might have to be reported as a beneficial owner because it has a 25% or better interest in that for-profit.
right.
So this is where this gets a little confusing, and um, why the government has assessed that doing the reporting where there's beneficial owners might take as much as 10 hours to do, but it could actually take much longer
More.
to
Hmm.
figure it out. The government always misstates what they think it takes to fill out these forms and determine what you need to determine to fill out the form. Filling out the form is easy.
Right.
It's determining what you need to fill out in the form that can be very tough and time consuming, which also says to those of you that are paying people to help you understand this, it's not necessarily going to be inexpensive to figure this stuff out. This stuff could take time to figure out. This is not a snap thing. And so do expect there to be professional fees when you're asking professionals to give you advice on to what to file.
I wanted to also touch on that, Tony, when we're talking about the beneficial owners, and we spoke about it earlier, it really does have to come down to a person. And I know I've worked on many partnerships that are tiered. So at eventually, we're following a trail up and having to calculate percentages all the way down to that partnership on every single level,
Yeah,
especially if they
yeah.
were required to file.
And we're talking about direct and indirect,
Correct.
because they've done this catch-all thing.
Hmm.
And again, they're trying to figure out uh, who is at the bottom of companies that in the past people have used companies to hide their involvement, and they're trying to expose this and rip off the wrapper so that they can see actually who are really the owners of some of these entities.
And I think this kind of goes into the difficulty of how the law is written right now with the ongoing requirement. And we've touched about this a little bit, but let's go ahead and go to slide 11, and we can talk about what needs to be updated. So how complicated this can get very quickly, especially for people who are not as um, informed on their beneficial owners. I know for us on the tax side, sometimes we don't find out that a company address has changed until a little bit later than we probably should. So let's talk about this calendar requirement.
This is one requirement that actually is a tremendous burden and may be impossible not to violate,
Hmm.
because oftentimes people will have beneficial owners. These beneficial owners will move, and they will not know until the end of the year that the
Right.
beneficial owner has moved until it's time to do their tax reporting. But this law requires that there be a reporting within 30 days of a change of condition. And that might be a requirement that's impossible. The other thing about this law, according to my understanding, is there's no provision for waiver of penalties for reasonable cause. So a lot of times in tax law, if there's reasonable cause, the government can waive a penalty. There's no mechanism in this law at this point um, to create a waiver. So that this is a real problem, and this is a real defect in the law, and this is why Congress really needs to do something to fix this, because it ain't good.
Well, and it also adds an added burden if there's any type of restructuring, if there's any type of death. There may not be clear-cut answers, but it does have this reporting requirement of 30 days. And we'll get into the penalties later, but they are quite hefty, and they're real. So there's that issue too. And we
Yes,
do have,
and those willful failure to file report,
correct.
$500 for each day,
Hmm.
and an imprisonment of up to 2 years, and a $10,000 fine. Um,
And
uh,
we've seen
Now,
this before too with FBARs. It's the same reporting agency, so it's not too surprising that the fees are hefty, the fines.
yes, well, see, now, um, the key word here is willingly, and so maybe that's going to be an out, but maybe not, because then you're going to have to go a whole to do is why didn't you know? You know, you willingly means that you knew the information and you did not report it. So maybe in that situation where you hear from that beneficial owner, 2 years or a year after
Right.
the move. And then if you report within 30 days of having that information, which means you're going to need to document when you got this information. So that means that if you're sending dividends out to someone or distributions from a partnership, and they during the year they give you, stop sending it to this address, please send it to that address. You need to stop and think for a minute, because possibly there was a change in condition that needs to be reported within 30 days. And if you did not make that inquiry, you might be held responsible because you willingly did not make that inquiry. So see, this is where it gets really confusing,
Well,
and why this law is very difficult.
right, and we talked about this earlier, but the change in mailing address isn't a change, it's only a change in residence. So then you add another layer of like, did they just change their PO box? what are we doing here? So again, it gets quite convoluted quite quickly. We do have a question, Tony. It says, are related party ownership added together? If yes, who is related?
I'm sorry.
So going back
Are
to the
related
benefit,
parties?
are
Okay.
related party ownership, is it added together? And if yes, who is related?
I have not seen, and this is from our friend Mike Zarati.
It is, yes. Hi,
Hi,
Mike.
hi, Mike. Uh, you know what? I haven't seen anything in any of the literature that talks about related parties per se, the way related parties are laid out in the tax law. Having said that, there could be an issue having to do with the definition of indirect control. So, certainly, um, uh, when you break down a trust um, where there are multiple beneficiaries, there might be a case to be made that there's some indirect control advised involved, and therefore um, you need to make a reporting. Again, belt and suspenders. When in doubt, I think you should report. Again, that's not my advice. I mean, that's what I would recommend as a layman. But again, we want to talk to attorneys about this.
I think
But
we can
there
go
is
ahead.
no related. I haven't seen nothing in the. There's not
No.
only small business guide, which we alluded to. There are rules that FinCEN has published about the reporting, and there's also something called frequently asked questions. Um, and I don't recall a frequently asked questions that talks about related parties, but there may be. So I refer you to the FinCEN site and look under FAQ for frequently asked questions, and they periodically publish them. I think the last one might have been updated in January. I'm not 100% sure.
And I think we can actually move into the next topic. So it's a smooth transition into we want to talk about what happened with the ERC and companies that are going to be formed in order to meet this direct filing requirement and what we really want to look out for so that we're not having repeats of what may have happened with your ERC credits.
Yes, you know what, and people have asked us who's going to help with this,
Hmm.
and the answer I have is I don't know. I believe that there will be companies that become expert on this and have positions on this, and you will be able to retain companies to help you do this where things are not that straightforward, and they will charge for that. I don't think our company will be able to do that, though we certainly are open to help a discussion about things that you as an entity need to worry about and get on the phone with your attorneys so we can have a group discussion. So we certainly want to help in that regard. Uh, but we are not, at least at this point, going to be in the business of helping people file their forms. That's probably beyond us right now. And I want you to know that we have already spent hours and hours and hours trying to understand what's going on here, and this question and answer period is to help you get a little more clarity on this. But I think there will be an industry like in ERC uh, where people are willing to go deep into this law and help you understand some of the stuff. As such, I've only seen one or two law firms that are actually advertising that they can help with these issues. But I would again talk to your attorney, and hopefully your attorney has other sources if they're not doing it that can help you investigate, and they can do it jointly with their attorney, with your attorney.
And again, I think something that we talked about earlier, and I just want to talk about that advice that Karen gave out. Make sure if you are contracting with any of these companies, what the length of engagement is. If it is just to file, if there's an ongoing requirement, what that's going to look like. And especially for people who maybe have frequent address changes, look at what those fees are going to look like too before you engage with anyone. I just want to make sure that we're saying that before we have it. I know that, Tony, when we spoke, there is a law firm that we can possibly recommend if any of our clients that can get in touch with us personally. Is that
Yeah,
right?
well, I've heard of one, but I haven't talked to them, so I'm not sure
Fair.
what they're
Not
doing.
yet. Okay.
And I know they're doing it for their clients. I haven't. I don't know if you have a trusted corporate counsel and you want to get advice from another law firm. They may not accept you as a client because they
Okay.
might want you to be a retainer paying client.
Totally fair.
So, but we're going to keep our eyes open for that.
Great. I think we're ending the nearing of our the ending nearing the end of our session here, and I don't think we have any other questions that have come through. Is there anything we haven't touched, Tony, that you feel is important to talk about?
Oh, let's see. I can't think of it. Does anyone in the Q&A have a question that's unclear? Um, I would like to hear from the listeners. I see two Q&A, two questions
Well,
coming
let's see
up.
what they're coming in.
I
Yes.
see a couple things. Anyone else have any other questions that are really vexing them that maybe we can shed some light on?
Right now, I'll go ahead and answer this one. Should a paralegal at a law firm get the FinCEN ID or just the owner of the company? I think our standpoint is if you are all going to be listed, you should get a FinCEN ID. Is that your correct answer, Tony?
Yeah, I think that I can't see a reason why a paralegal wouldn't get the FinCEN ID because it doesn't hurt anything. But I would, if I'm a paralegal working for a law firm, I would talk to my direct supervisor and find out whether they're recommending that. Most law firms are going to have to uh, come to grips with who should get a FinCEN ID. It may be administratively difficult to have everybody in the organization get a FinCEN ID.
We have someone that Devin has said, note that you can only file one FinCEN ID with each email address. And this can create complications if you have one person that wants to file on behalf of several people. So kind of keep that in mind as well.
Yeah. Yes, I think what are they looking for? They are looking for, uh, they're looking to collect information about people that make these applications. And so if everyone's using the same email address, that's not creating clarity for the government about who these people are that are on this file. So yeah, thank you very much, Devon, for that comment. Mike Zarate asks if you're a pre-2024 entity, please clarify if what has to be filed. If you're a pre-2024 entity, it is the company application on the FinCEN website. It is all electronic. It doesn't have to report the applicant, but it does have to report that company information. Can we go back to that slide where the
So
company,
the company information, slide 7.
yeah, the company application slide? What company application is legal? I think it's number 7.
Mm-hmm.
And the full legal name, trade name, current U.S. address, jurisdiction in which they were established, and your ID number. And so going onto the website and putting into that, it really doesn't take that much time to do. It's deciding who needs to be reported.
Right. So we have this is the company information, and then we have the beneficial owners plus the control persons.
That's
So for
correct.
P 2024, company information, beneficial owners, and control persons. So that
Right.
will be anything prior to 1/1 of this year.
Our friend Steve Human asked, should we do something now or should we wait to see if there's any changes or delays? Um, I think that's a really, really great question. Some people um, want to get it over with. And if there's real clarity around 25% owners and who the control people are, and you want to file and you get it over with, if there's a delay in the law or if there's a change in the way things are enforced, no harm, no foul. You've already registered. Um, there's a lot of companies that are delaying, hoping that they don't have to do it. But I think those are going to be companies that have a lack of clarity about who their beneficial owners are and who the control people are. So, and they don't want to go to the trouble. There are some entities, some clients we have that might have to report on 25 or more entities, and so that That can take quite a bit of time. So you might want to kick the can down the road. I would not get much past July 1st
Yeah.
if you were waiting on this, because again, there could be a crush of humanity trying to get into stuff. So I would right now, Steve, figure out who your beneficial owners are and who your control people might be. So you have that kind of lined up, even if you don't file the form. But right now, we see no indication that this law is going to go away. We hope so. Has anyone on this listening to this seen any indication? Answer in the Q&A.
I also just want to state this too. I know we talked about it briefly, but if there is any murkiness on the necessity to file that beneficial owner, so we talked a little bit about trust, and there's a real gray area that if you are 25% or more of a beneficial owner as a trust, if and who needs to be listed. So again, if you have any complications that are looking more like that, waiting a little bit might be beneficial so there's more clarity. However, as Tony said, if it's pretty cut and dry, and you really don't meet any of the exemptions, there's no real need to wait.
I will say this: I'm trying to read the literature that's being published on some of our publications, and a lot of the common commenters commenters are asking more questions. What they're pointing out is where there's lack of clarity. They're not coming up with conclusions, and that's the problem. I think that's the problem with any new law. But in this case, with the penalties being these severe, for
And
will
again, let's show the penalties
disregard,
one more time, slide 12, just so that everyone has a clear idea of what we're dealing with. Thank you.
right? That's pretty expensive stuff. All right, Jessica, I think we've beaten this thing to death.
Yeah, I just want to go. If anyone wants to find out more information about any of what we talked about, you can go slide 13, Crystal. There are resources available. Tony alluded to several times the small entity compliance guide. It is written not for accountants or lawyers. It is written so anyone can any financial backing, anyone that has a company can kind of read through and at least understand what is going on. Highly recommend just going to the FinCEN website and looking through the material there. And again, we are here to help in any capacity we can. Tony, any parting words of guidance before we
Uh,
call it
I,
a
I
day?
I appreciate everyone taking the time to listen to this. This will be recorded, and I think we'll be able to pass it on to people that want to hear it.
We will.
Appreciate people being attentive, the people that ask questions, and I think we're going to be continuing these question and answer series on different subjects, aren't we?
We will. So we will have another webinar next month. It will be monthly. And
Okay.
thank you.
Also,
Yeah.
unabashed commercial. We'll be reinstituting. We'll be reinstituting my podcast called "Go Beyond Numbers."
Yes.
Well, I'll be interviewing very interesting people, mostly about topics that have nothing to do with taxes or accounting. Um, we've had some great guests, including best-selling authors. In prior, and so we're going to be
Mhm.
firing that up again beginning
Great.
in the next several weeks.
So if you need a break and you don't want to listen to the corporate transparency report, I highly recommend listening to Tony's
Absolutely.
podcast.
All right, everyone,
Again,
have a wonderful day and a wonderful weekend coming up. Stay dry if you're in wet areas, and stay warm if you're in cold areas.
thank you so much, and we look forward to seeing you guys next month.
Bye, everyone.
Bye.